Hey everybody, good to be here today. My name is Brent Moors. I'm sitting in for Cameron May, who's out today, but he'll be back next week, I believe. Time for getting started with thinkorswim. Today I'm going to talk about an important feature, especially if you're an options trader, on the thinkorswim desktop platform. By the way, I am joined alongside Barb Armstrong, who's helping me out in the chat today. She has some wonderful classes throughout the week. Make sure you check those out, including tomorrow morning, getting started with options. If you're new to options, are interested in learning about a variety of options strategies, check out Getting Started with Options. Barb Armstrong teaches that. She's a wonderful teacher. You can follow Barb or myself on X at Brent Moors CS or at Barb Armstrong CS. Make sure you check that out. Now, as I mentioned, we will be talking about options today. Options do carry a high level of risk and are not suitable for all investors. And the information I'm going to go through today is for general informational purposes only. It's not a recommendation of any security strategy or chart type. We will be looking at individual trades, individual options trades today, symbols. Those are just examples. The paper money application is for educational purposes only. All investing involves risk, including loss of principal. Okay, let's head on over to the thinkorswim platform. By the way, this is if you're brand new to thinkorswim or if you've been with thinkorswim a little while, we have a variety of webcasts that are here to help smooth your ride here as you're learning it. We have this Getting Started with thinkorswim on Tuesdays. We also have a Exploring thinkorswim webcast. In fact, if you are on the Trader Talks Schwab coaching webcast page, so this is on YouTube. If you just go and type in Trader Talk Schwab, you'll see some different results. One of these will be this page. You can subscribe to this page, and that way you don't miss future content. And if you go to the playlist on this page, which I'm right here on, and you scroll on down, towards the bottom row is like dedicated to thinkorswim stuff. So you have Getting Started with thinkorswim, you have Exploring thinkorswim, you have ThinkScript Studies, you have Street Smart Edge to thinkorswim. So all things thinkorswim. Well, let's be honest, most of our webcasts touch on thinkorswim one way or another, but these are really platform demonstrations to really help you out. And then you can just view that full playlist if you want to get more in-depth information there. Okay, so that I'll leave it there. Let's move on to the thinkorswim platform. As I mentioned, I want to talk about a tool, and that tool today is thinkBack. thinkBack is a tool that enables you to recreate, to backtest historical option prices. Let me just use a stock as an example here, and for our purposes, I'm going to bring up Colgate-Palmolive. It's a company you guys have all probably heard of, I'm sure. I think I use their toothpaste every day. There you go. That's Colgate-Palmolive, and you can see they've had a nice run. But if you're back testing a strategy, and I'm just using this as an example, but the thing you need to first decide is, what are your rules? It always starts with rules here. And so if your trading rule is, something to do with maybe an RSI indicator, great. What you can do is you can pull up the RSI on your chart and you can go back in time and look at that RSI. Okay. Maybe yours is looking for a hammer candle. Okay, great, do that. For our purposes, what I'm going to do is I'm going to say, what if we had a rule where when the 10-day exponential moving average crosses above the 30-day simple moving average, okay? That's just one way of doing it. You'll hear that it's not an uncommon type rule. Very often people use moving average crossovers. But let's say that's your rule for our purposes here. When the 10 crosses above the 30, we're going to call that an entry signal here on that, okay? And then what we'll do is we'll look to get out when we cross back below. Now, did we ever cross? I don't think we ever, maybe we crossed back below right here, Okay, so I'm gonna say I'm just gonna take note of that date there. That's 6/12. Okay, I'm just looking at the top of the page, upper left portion of the page. It gives me the date I'm on, June 12th, and I got in. We're looking at getting in on, what is that? 4/25. Okay, April 25th to June 12th. Now, if I want to backtest stocks, simple enough. When did I get? Well, I can look at what the price was on that day of the stock. And I can see, if you look at that, I'm going to move my cursor here for a second. You can see open, high, low, and close here on that. Okay, so you can see the prices on that day. And we said 425. Let me go to 425 here. And I can just say, well, what if we bought 100 shares there? Okay, you can do the math. Buy 100 shares there. I'm going to sell 100 shares on June 12th there, and you can do the math to figure that out. It becomes a little bit more complicated with options though, right? Because with options, you're not dealing with the stock price that's displayed on this chart right here. And you may have various types of options trades. Now, technically, I can go back and look at options charts, price graphs. You can put an options price symbol up here if you want, but I don't even know what options were available back in April. Well, now we do through the feature called thinkBack. Go up to Analyze. Now, this is kind of the lesser known function on the Analyze tab. And we can see, add simulated trades, risk profile. Those are the ones we typically talk about. Probability analysis I talked about last week in a class. thinkBack, though, is the feature I'm going to talk about right here. And what I want to do is I'm going to just shrink this down, this graph down here. And when you look at this page, you're going to go, well, that looks kind of like a trade page, doesn't it? Okay. And what I can do is I can say, this is what it looks like. Well, actually, I have a different date on here, but let me go to, if I go to today's date, this is what it looks like. This is what it would look like on the trade tab right now. But remember, I'm curious about what it was like on April 25th, or you can pick April 1st or whatever you want. In this case, I'm going to click back here. I'm going to click on my little calendar. I'm going to go back to April 25th. And this is what the options chain looked like. These were the available options on April 25th. Look, this May 3rd option these options have long expired at this point. Okay, but this is what it looked like. So let's say we were doing a long call and we went out about 50 to 70 days. So the June 21st contracts, again, those have expired at this point, were about 57 days to expiration there. What are my rules? Well, my rules for our simple exercise here today was I'm going to go to the at the money contract here, and we're kind of right in between strikes. I'll just go in the money one strike here. So I'm going to buy this. And what I'm going to do is I'm just going to click on the ask price, just like I would if I were buying a call option. Now, I'm going to be buying a call option on this example, but we can do other types of trades here if I want on this. And when I clicked on that, it brought it up right down here. This is what it looked like. Okay. Now, I want to know how much money would I make or lose if the stock, what do we say? I wrote it down, June 12th. What would our profit or loss be on June 12th? Now, I did an example where it's going to show a profit. Look, it's just as likely you're going to do an example where we're going to show a loss on this too, right? So don't take this as promissory in any sense here on this. But I'm going to change this date. There's two dates on the chart. One is our starting date. That's the upper right. Down here, this is our ending date. And our ending was June 12th. Let me go to June 12th on there. Now, when we look at this, what I'm going to do is let me just shrink down this left-hand column here so you can see it a little bit better. I'm going to pull up my little drawing tool here. Now what I can do is I can look, okay, this was our original date, April 25th. These are the details of the contract. I'm just looking at one contract of CL of a 21st of June contract and 8750 call. My profit or loss on this is right here. Now, Bob is saying, look, it traded at different prices throughout the day. You're right, it did. This is end of day pricing, everybody. Okay, this is end of day pricing. So it is what it is in that regard. Now, so this is the key figure right here, $345. Okay, so I can see how much money I would have made, or approximately, right? And this doesn't include commissions, right? I'm not including commissions here on this, but I can also see as I look at this, and I'm kind of zoomed in. I don't want a 5-year graph here. I'm going to shrink this up. This is my profit or loss right here. You can see this in the, what is that, a yellowish, orangish line right there. I can see what my profit or loss for that trade is as compared to while the stock was doing this. You can see this is the stock price. This is the profit or loss graph right there on this. Okay. So there we go. Okay. So easy enough. That's how you can do a past trade. Now, let me do something one step further here. What if I don't want to just do a long call? Maybe I want to do something like a different trade here. But before I show that, I'm going to show you a different trade here. You know, this is part of, I guess, back testing. You can go back farther in time if you want. If I want to go back, let's go back a while here on this. I'm going to go back 5 years. Okay. Let me just do this. I'm going to just zoom in. Okay. And I want to see some time frames that I don't know what's going to happen, because I kind of cherry picked, to be honest, that last trade. I looked at Colgate and I kind of did that. But here's what I did. I zoomed out to a longer time frame. In this case, I went to a 5-year, 1-day chart. And I didn't really pay super attention to what was happening to Colgate on there. But what I want to do is I want to zoom in until I get my next crossover here. We just got the crossover on this. Now, this is on, our date here is, I'm looking in the upper left portion of the page, 4/8. Okay, let me write that down. 4/8 of 2020. Okay, so this was COVID time period. Now, for our purposes this time, on this trade, instead of doing a long call, let's say we're doing a short put vertical. Can we do that? Yeah, we're going to do a short put vertical here. Now, could I do this for a bearish trade? Yeah. I mean, I could have done it right here for a bearish crossover where the 10-day exponential crosses below the 30-day simple. And that actually probably would have worked out fairly well in this case. But that was kind of a weird situation. We're back at COVID time on this. So let's see how long are we going to get? Well, I'm going to stay in until we cross back over. We'll see how this trade does. I have no idea what the graph does from here. Okay. Okay, we're about to cross. There we go. We crossed over on 5/7 of 2020. Okay. And this is a short put vertical. So here's what we're going to do. We're going to go to our Analyze tab. We're going to go to thinkBack. Let me clear out my current trades that I have on here. I'm going to go back in time. If you click on that little double arrow, you see that I can go years at a time. I'm going to go April 8th. So this was our entry on that. Okay, here's what the option chain looked like at that point, including, by the way, our implied volatilities, what they were looking like at the implied volatilities were fairly elevated. Well, again, it was COVID time, so implied volatilities probably were elevated. But if I look at this and I did, I'm going to go out, we'll go out, I'll go out a little bit longer here. I'll go 37 days here on this. And I'm going to look at a few more strikes. Now, what I can do is you can also see what the option Greeks are, right? Now I'm looking for a short put vertical. We're sticking with the bullish theme here. And I'm going to pick a delta between 30 and 35-ish. So here's a delta of 30. So I'm going to do the 65, 62.50 short put vertical. Now I could add those on, click on those individually if I want. It'll show two line items, and then I'll just have to sum the performance of the two. Alternatively, I could just go to spread vertical. Change vertical, and we said 65 and 62.50. So I'm going to do vertical. Okay, I'm looking at my puts, 65 and 62.50. I'm going to click on that here. I'm going to go down. Let's just kind of double check and see that this is what we want. And this is a $2.50 spread, $2.50 spread. But my PL date, remember, I got to change my PL date here to May 7th. Okay, so I'm going to change that to May 7th. Okay, I'm going to click my enter key. And how much money did we make on this, or how much money did we lose on this? In this case, we made a whopping $26. Now, we only did one contract, but, that kind of, one thing I would maybe suggest is you can compare different contracts here. In fact, what we can do is, let me close that. Let me get out of my little drawing tool. What if at the same time, instead of doing the short put vertical, we did that, let's say we did a long call at the same time, okay? And so I'm going to go, again, I'll go to the 67.50, and I'm going to click on that. Now, the tricky thing is here, you got to be careful. At the time, I probably would not actually do this trade, just given the wide, big bid-ask spreads there, okay? But I'm going to go with it for now, okay? So let's do this again. Let me go to 5.7. And what we can do is we can say, hey, look, ooh, this kind of gives us some insight into this, the differences between the trades, because often the question is in these classes is, what's the difference between a long call or a short put vertical? They're both bullish trades. They're both options trades. Well, a couple of the differences is, one is theta, the time decay of one is positive. In other words, time decay benefits us if it's an out of the money short put vertical, whereas theta is going to be negative in the case of just a long call. Another difference is like your max gain potential. If a stock goes up a whole lot, you're likely to benefit significantly on a long call, whereas on a short put vertical, you may still make some money, but you may not make that much money, right, on that. Now, in this case, I suspect the biggest issue, you can see here was our short put vertical where we actually made a little money. Time decay helped us out. Here, we're actually losing a fair amount of money. I suspect that's driven more from the spread than anything else on that, okay? So, but time decay would be hurting us on there. So if you want to compare one strategy to another, and this isn't a recommendation of a strategy, but it's a way for you to compare different strategies, you can do it that way. And there we go. So you can see those two different trades side by side. You can go back several years with several years of data on those. And there you go. Now, let me just kind of cover again an important thing. And this holds true whether you are doing back testing based on stock movement or option movement. What we don't want you to do is go here and just find that, oh, look, American Express has been going up lately, therefore I want to back test during this time period, right? Because I'm kind of, like I mentioned before, I'm kind of cherry picking this. So if you are going to go back to a farther time period, what you can do is, I'll go to McDonald's. McDonald's is in the news. They had earnings, which was disappointing people. Evidently, people don't like to spend a lot of money on McDonald's. You'd kind of hate to take your family out and spend $50 at McDonald's or something like that. So they're starting to feel the pinch here on that. But so if I go to McDonald's, I can see that. But what you do is go to a longer term chart, but make it a daily data chart. So I can go here to whatever time frame I want. I can go back 10 years if I want. Make sure it's day, but then just zoom into the early part of the chart. And then what you can do is you can scroll on over to a period, and you could say, well, you can add on whatever technical indicators you want on that. And then you can find your entry signal. Let me look at the next maybe cohold here. Okay, right there is a cohold. And so we could go back and look at that and think of what your exit signal is. Maybe your exit signal is a close below the low of the high day. Well, that would be a close below the low of the high day. So this would be a shorter term trade from there to there, and you can do your option trades there on that, okay? All right, I think, let me see if there's any questions in the chat. If you have any questions on this thinkBack function, let me know. Now's the time for them, because I think I've showed you what I want to show you here today on that. It is end of day pricing on that. And just, it probably goes without saying, but you can do this for any type of trade you want. You can do this with bullish trades. You can do this with bearish trades. If you go up to here, you can see, and you can enter your trades right there on this. And also, if you like, you can follow on your profit or loss down at the bottom of the page, right there on that page, on that thing. Sometimes you got to zoom in on that though to see. Okay, everybody. All right. Is there a way to think back to rejected options trades? So Eva's asking, is there a way to think back to rejected options trades? Well, I guess I'm not sure exactly I'm understanding you, Eva. Let me give you an attempted answer, but I'm not sure I'm going to answer it because I'm not exactly sure what you're asking. You can look back on past trades, folks, that didn't go through, that were rejected, by going to your trade history. If you go to the Monitor tab, go to your account statement. Now on this, you need to be on a particular account. So here I'm on this account right here. You can go to your order history. Don't go to trade history, because if the trade was rejected, it's not going to show under trade history. It never filled. What you can do is you can go to your order history, and then you got to change your time frame, right? You can go back, and let's say we knew what stock it was we were looking at. Okay, I'm going to put an Apple here. So I can go to Apple here, and I can go back in time. Now, maybe I want to go back a year. Well, instead of going 30 days back from today, I can go from, we'll go 2023, well, let's say, we say 2022 to, this is a newer account, so I'm not going to have that much data. But if you've had this account, you can go back further in time here. You can go back though on that if you want by adjusting that there. But let's do this. Let's pull this up, and then I can go back, and I don't have any, I'm on order history. I don't have any rejected options trades on here, but I have some canceled trades, and it's going to say essentially it'll say rejected right there. Okay. So that's rejected. And then what you can do is just note the date. You can see what price you had. It doesn't, because it didn't fill, you're not going to know what price it filled at. Okay. But then you can go what day you would have got out of that, I guess. I don't know. So that's to Eva's question on finding past rejected trades. But the primary purpose, I would say, for our thinkBack is to go back and back test. Let me just conclude with like a discussion of why we back test. If you were coming up, say we were doing a new strategy. Let's say you want to do that crossover strategy I kind of mentioned at the beginning, okay? What I can do is I can paper trade, right? That's great. But for me to go through and get kind of a statistically relevant sample of a number of trades to test out that system, I'm going to be sitting here perhaps for several months to figure this out. What I can do is by going back in time, I can test trades that have actually already would have occurred, and I can give it a fair shake, so to speak, and I can do it in an hour's time instead of having to wait several months for each of them to play out live in real time. So that's kind of the theory behind backtesting. All right, everybody. I want to thank you all for joining me today. We have trading ETFs today at 4 o'clock Eastern time. Make sure you check that out because that class is a live class. It's not recorded. So make sure you check that out. Trading ETFs, Connie Hill teaches that class. I want to thank Barb for helping me out in the chat. Make sure you subscribe to the Trader Talks channel. Thanks to our producers for helping us out and putting on a smooth webcast. And thanks to you, each of you, for taking some time out of your day. And everybody have a wonderful rest of the day. And we'll see you again soon. Bye-bye, everybody.